today is Deepak Varshney, the President and CEO of Formation Metals. Deepak, great to be speaking. How are you?
I'm good. I mean, look, we're in the middle of a drill campaign and we're finding some success. So what better spot to be as a CEO of a gold company?
Excellent. Well, I mean, since you mentioned that, let's get straight into it. I would normally ask for the elevator pitch, but you've got this really nice picture that came out in a recent RNS. It's visible gold, that's very unusual, but really good, isn't it, to get that visible gold?
It's fantastic, right? This is, I think, the first time we've ever seen this in the A zone, right? And I mean, our project is one of the cool things with this project, when we picked it up a year ago, is we had this firm belief that we would see improvement in the grade through our own, through our own modeling, our own review of the data. We felt that there was room to improve the historic grade because this project has almost 900,000 ounces at 1.5 grams. And so, obviously you get to work, you do the drilling, and what we're seeing here is, this is a bulk tonnage deposit. I always talk about this concept of sexy, boring, sexy. This is sexy, right? Visible gold is very sexy. Everyone gets excited. But people need to remember, this project is going to, we are targeting a 3 to 5 million ounce open pit deposit. That's our goal. Seeing visible gold, seeing pockets like this, we will have higher grade zones is great for that thesis, right? And so, this was such a surprise. It was awesome to see.
Yeah, it's really, really great. So just give us a bit of a high level overview of what sort of the company, where you're at right now. You say you're in the middle of a drilling campaign. So what's the elevator pitch, if you like?
Yeah. So look, we're a very, I think, undervalued gold exploration company. We're an advanced asset in Quebec. It's in the heart of the Abitibi belt.
Okay.
It's over 200 million ounces of gold in the last century. Literally adjacent to a mine that went into care and maintenance a few years ago. So, we have no issues with infrastructure, no issues with local stakeholders, First Nations, government. We're 20 kilometers from the town of Matagami. So, beautiful jurisdiction with a past history of production. And so this project was, really advanced in the 90s and 2000s. Agnico was the last company to drill this before we did.
Okay.
Know that name, Agnico Eagle. And they passed on it because of the gold price, right? Ultimately, our vision when we acquired this asset a year ago, gold is $2,000, right?
Right.
At $2,000, $2,500, 1.5 grams, even if it is at surface, isn't attractive enough, right? The pricing isn't there. The economics don't work. Now at $4,000 gold, all of a sudden, this is a project that's very viable, even if it's formed today, right? So historically, 55,000 meters have been drilled. They had put together a resource with a high-grade component, but a global resource of 871,000 ounces. And so, we picked up this project with the expectation that gold prices would be improving. Obviously, we didn't expect gold prices to double this year like they have, but this was our thesis. We saw an undervalued asset. We acquired it, and as the years progress, this past year has progressed. It's been wonderful because we first targeted a 2,000 meter program, then we targeted a 5,000 meter program, then a 10,000, and now we're fully funded for 30,000 meters. Right? Wow. We just raised $8.5 million. We had $2 million of warrants come in. We're sitting at just under 14 million in working capital right now, and I would challenge most people out there. I'm an investor myself. I look for companies that are well funded so they can execute. I look for companies that have more advanced projects. So, you've de-risked the actual project. We still have huge discovery potential in this property. We have over 15 kilometers of strike to drill out, but it's almost de-risked because with that 55,000 meters of drilling, they were hitting in the A zone, 84% of holes came back with gold mineralization. 84%, right? This is a bulk tonnage deposit, right? That boring, sexy. The boring, sexy, they just hit gold everywhere. And we have 15 kilometers of strike. That's why we think we can get to 3 to 5 million ounces. And so, you find a junior that's trading a $25 million market cap. Our enterprise value for the resource, this historic resource, would be $11 million Canadian. So what is that, like $7 US an ounce? That's criminal, right? Was a Northern Superior just sold their resource for $42 an ounce. So it tells you that there's a disconnect. And it's our job to fix that disconnect, right? So finding this VG, doing the drill program, that's how we're going to show the market that this is, what we thought was there is here, that we should be valued much higher than we are today. And fortunately, we have such a healthy working capital balance that we can go and execute, right? 30,000 meters fully funded. And so, what can I say? Like, find me a junior trading under 25 million market cap with 14 million cash. And, I would love to buy that too. So.
Well, it's unusual, I would say. So let's get a sense of where you are. So at the minute, do you have is it 871? Oh, that's the historic resource.
That's
but you've got a resource. You've got a target of what, 3 to 5?
That's what we think so, right? Because the historic, as example for the A zone, right? So 522,000 ounces are held in the A zone historically, and they did that. They found that over about 1.5 kilometers of strike, and there is over in that zone 3 kilometers of strike left to drill, right? And they had done drilling outside of the core of that zone, but never followed up on it, right? For them, hitting 20 meters of 2 grams wasn't that exciting because end of the day, they were chasing after the high grade pockets. Like we've got some holes that are 80, 90 gram meter holes, very high metal factor holes, right? We've got 51 grams over just under a meter, right? 16.5 grams over 4 meters. These are, obviously even at $800 gold, like Agnico was looking at in 2008, still, there's a mine to be built around something like that. And so they ignored, 10 meters of 2 grams, 20 meters of 2 grams, 15 meters of a gram. Like these are great hits to follow up on. And especially at $4,000 gold, it fits our open pit thesis. And so we look at this and say, okay, you've hit gold outside of your historic model. You've done nothing to connect the dots. Let's go connect the dots. And if we can connect the dots, 3 to 5 million ounces. And I know geology is not that simple, right? My background is I'm a geologist. I come from a family in Vancouver that's been in the capital markets for almost 40 years. So I'm also an entrepreneur. I think that's why we've been fortunate this year. We've raised almost 17 million this year, right? So it shows there's a lot of support for our vision for this company, for this project. And, our last raise was at 37 cents. The raise before was a charity flow at 50 cents. We're trading, I think, at 27 cents right now. And it tells you that people understand what we're targeting and are willing to support us, right? And they're happy to let us go and execute, which is why we have, the money we have now. So our view is if we can connect the dots, and we see a reason why we wouldn't be able to connect the dots, this is going to be 3 to 5 million ounces, right? There's a ton of ground that haven't even explored that they ignored because they, like I said, most people hit 10 meters of a gram. That's a discovery hole to go focus on. These guys just walked away and said, next.
Sure. Okay. Well, I mean, when you talk about connecting the dots, I want to get a sense of what that should look like. Is that the near-term objective to get to a resource statement? Is it to perhaps understand the extent of the strike and then think about how, because you mentioned open pit there, to sort of understand how you could perhaps go about it? What would be the next immediate objective for you?
Both of those, right? So we are going to be working on our internal resource, right? I think ultimately we want to, part of the drill campaign, we're not twinning any holes, right? I'll be very clear. That's what I keep telling everybody because people say, well, are you going to twin? We're not twinning. We don't need to twin. What I would rather do is infill, right, in gaps in the model. And if the gold's not there, then we already know there's a problem. There's no sense in twinning something and coming back with information the market already knows. So we're going out there, we're doing infill drilling to validate the historical data, right? Because you can show that, look, this is, they said the gold is here, right? And also, in cases like this where you had a 31 meter interval with VG will likely improve the grade of the model. At the same time, we're trying to miss, right? Because we are trying to find the extent of this open pit thesis, right? So ultimately, I think it's kind of funny to say this, but we want to keep drilling until we don't have any more gold, right?
Sure.
That's what we want to do. And so, what I'd like to do in 2026, look, we have 30,000 meters funded through the end of the next year. We have a rig going right now, but after this initial program, we're going to go to 2 rigs next year and accelerate our drill plans. Our goal is to put out a resource estimate in probably late Q1, Q2, right? We're not going to get to 3 million ounces tomorrow. You take steps, right? But I can say this. The historic resource was done at 0.5 gram cutoff, which in today's world doesn't make any sense. And that means that they've cut out a lot of holes that they would have included if they were using a 0.25 gram cutoff, is what we see typically today. Even in the holes that they did include, they were taking material and considering it waste because, again, 0.5 gram cutoff, right? But if we have 0.8 gram material, very shallow, and this deposit starts pretty much right at surface, that's not necessarily waste, right? So I think we'll see an improvement when we do our resource just because of those two facts. And again, it's just a function of the gold price being where it is today, and what they were dealing with, 20 years ago.
Yeah.
And ultimately, our own drilling is going to help improve this, right? Because we are doing, whether it's infill or extensional drilling, drilling that would then be incorporated into our own resource estimate, right? And hopefully, what would be great is if in the summer of next year we have 1.5 million ounces, right?
Okay.
And then we drill another 10,000 meters, another 15,000 meters. Now we get to 2.5, right? Because we're not going to get to 3 tomorrow, but I want to be able to show people there's a pathway to 3 million ounces, and that's what this first program is about.
Okay. And how much do you understand of the deposit at the moment then? I'm trying to get a sense of whether it's sort of this sort of pockets of
No. So there's great continuity, like wonderful continuity, right? Look, some of the and that's kind of why we're doing some of this infill, is because there's spacing. Some of these holes are spaced 100 meters apart, right? And so for us, let's go split the middle, right? Let's go right down the middle and see, is the gold where they're saying that was. But no, it's very well understood. They drilled 55,000 meters. Continuity has been great. There's room to grow this resource, not just along strike, but just at width, because there's a ton of holes to the south of the main resource which weren't included in the old resource because they couldn't find a way to make the economics work, right? So for us, it's actually it's funny. We're not just drilling along strike, but we're actually going to be expanding it laterally as well. So there's a ton of room, right? There's like the gold system here. Actually, when you include the RJ zone and the A, which are very, they're parallel, right? Broadly parallel. There's almost up to almost a kilometer wide. So it's a big corridor that's auriferous.
Yeah. Okay. And is the drilling sort of, you say it's on strike, but is it sort of centered around a potential sort of open pit area, or are you sort of at the minute still going along?
That's exactly
right.
That's
exactly. Okay. Good. Okay. And like you say, the gold price, so this was obviously something that was walked away from before because the economics didn't add up. But at 4,000, over 4,000, I was in Zurich last week at the Swiss Mining Institute,
right? And you think about 2008, like it was the big recession in 2008. Exploration budgets were being cut across the board. Mining had a rough start to the teens there. And, for a company like Agnico, which obviously has done phenomenally in the last year, you're tightening your belt. You're going to cut back on your lower grade projects, right? And so this is something, the way I put it to people is, if you went to someone today and said, look, we have almost 1 million ounces historically at 1.5 grams at surface in a tier 1 jurisdiction with town 20 kilometers away, power running by the property, highway access, no issues with government, no issues with First Nations. Would you start at that? Of course, I think most people would jump at that story today, right? Agnico included.
Well, starting at 1 million ounces, I think that's you could start in worse places. Absolutely. But the vibe from the Swiss Mining Institute, their target 5,000 is the next kind of target, perhaps in sort of 12 to 18 months' time. So everyone was very bullish on the sector. I think the time is now. So it looks like you're, as you say, well backed, well funded, and a busy 26 ahead of getting that resource out.
That's it. It's kind of, it's a great spot to be in, right? I think that, as I said, we were tentative. The market was a bit tougher earlier this year, but we've been fortunate to raise enough capital to now really get to work and focus on delivering what our target is, our vision is, that 3 million ounces. And I think you're right. Gold is going to keep rising. I think that there's a lot of tailwinds supporting the gold price. And I think that ultimately is going to help us, right? It's going to be benefiting us. One of the cooler things we also have lined up in 26 is we have an M&A strategy because we are well funded. We have the ability to start assembling a district here, right? Unfortunately for some of our peers, they haven't been able to capitalize. And, for us, that benefits because we can go out and, we can meet with them, acquire them, and start growing this, because there's a ton of wonderful ground in the area to work on that it just isn't getting any money towards it because it's too small, right? So it'll be good. 26 will be very good. I'm excited. Like, how could I not be excited? We hit VG in our first drill campaign. Like, what else could we have hoped for? So
exactly. Well, thank you very much for your time, Deepak Varshney, the President and CEO of Formation Metals. Looking forward to following the story.
Yeah, I'll be back very soon.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at StockBoxMedia.com. Thank you for watching.